Good afternoon, traders. All right, time for recap of week 44. Putting this video together on Tuesday afternoon, so missed my Sunday deadline. Told you journaling my weakness, but I'm doing it. So let's get on to it. We'll just pretend it is Sunday. Right, so we will start with Sentinel-1. So I actually got out of this trade last week Monday, actually, on the 3rd. I ended up paying back 18 cents to close it, which was close on 50% profit. Why did I do that? So if you remember, the strike for this I had was at 17. So here I'd gone in the money the week previous, come out of it on this big bar, and then on the 3rd, late on the Monday, you can see that the stock kind of went nowhere. I did go nowhere, up and down, which, it bumped its head off this 100-day moving average, which historically for the last wee while, back into September, and then before, Sentinel-1's just really reactive, I find, to its 100-day moving average. So when I saw this on Monday, it couldn't break through it. I'd been in the money, I came out of the money, I could take a profit on this trade of 50%. I closed it out myself, which was fine. I'm always happy to get out and have money to reinvest elsewhere, and I just did not like the look of Sentinel-1. I think it's a brilliant company, don't get me wrong. I will be back into it at another time. I just didn't like the look of this chart, and sure enough, I was proved correct the very next day. Although it's regained this ground now, last Thursday I would have been looking at what my options were on that one. Look at this, it came right off this support level here. It's nice to see. Technical analysis, it does work. We had a great big green bar, so it has come back. But yeah, I was at this trade on Monday for a nice 50% return. Or not 50% return on the capital, 50% profit on the trade, which was that's about 1% return on capital for the time open on that trade, which isn't bad. SoFi. So I entered SoFi last week on the 11th. No, I didn't. 11th is today. I've just hit that's why that's in my records. I have just hit the profit take on that one. That's nice. I entered this on the 4th. That's what I should be saying. Back here. So I entered this on the 4th. I got 57 cents a share for that. Talking nonsense, I haven't hit my 50% profit, so that was something else I was looking at. No, I'm still in this trade. I entered on the 4th for 57 cents at the 27 strike level, which is a nice return for me if this works out. 2 days later, we had a bit of a reset. Why did I pick the 27 level? I mean, SoFi is on a tear at the moment, as I've said in my previous videos. It's just up and up. And what I am seeing with SoFi is it follows its 20-day moving average very closely. When it does break through it, the 50-day moving average is clear support. So my 27 strike was below the 50-day, or right on the 50-day moving average, just about there. Yep, when I entered this trade, which was what I thought would be a good area of support, and it turned out to be. We had that drop. Yeah, we went below the 50-day, but we quickly came back, finished the day green on the 7th, and then Monday and Tuesday so far. are back to the up and to the right for SoFi. So I'm happy to keep rinsing and repeating this trade if I can get decent returns for below the 50-day moving average every time I close. RSI is not overbought. We got Mac bars coming the right way, getting less on the red side. So, yep, we'll see what happens with SoFi. NVO. Oh, am I so wrong on this thesis or not? Who knows? So, as you know, I was assigned the 56 level, and last week I sold the 56 strike call for 45 cents on the share, which clearly expired worthless last Friday, because last Friday we were right down here at our new low, which matches up with the low of August. So this Monday just gone, although this will be in next Sunday's recap, assuming I hit the Sunday. I have sold another call for the 14th of November for this coming Friday for 33 cents. So I'm still getting decent premiums. I did sell at below my cost basis, of course. You know, cost basis. The assignment price for these shares right up at 56. We're a long way away from that. So I sold the 51 strike, which was, I think it was about 13 delta when I sold it. And that's given me some good premium while I wait for the recovery, which seems to be happening today. So I'm going to keep an eye on that. I'm obviously not prepared to let these shares go at 51. So if we keep rising like this, I will be rolling those out and up closer to 56. We'll see how it does today, but things are looking good. Has something happened? Revealing study results, price cuts in India. Okay, well, wherever it is, prove me right on my bull thesis, please, NVO. So that's where we are with that. So since I've been assigned, I've sold 2 covered calls, weeklies, and brought in a premium of 45 cents per share on the first one and 33 cents on the second one. So still making some good income. Right. IBKR. So this is a trade I took last week. As you know, IBKR, Interactive Brokers, good solid company, and I like the chart going up and to the right. Clearly, like SoFi, following our 20-day. When we break that, seem to be very reactive to the 50-day. So I quite like that chart. It's going in the right direction. RSI is not oversold. We're on the right side of 0 for the MACD, which I like. I prefer it if these bars were getting bigger rather than smaller on the green side, but you can't have everything. And I sold this on, what was that date, the 11th. I keep saying the 11th, and the 4th. I sold this on the 4th. It's the American dating system on tastytrade. I'm used to days being first, not months being first in the UK. Anyway, I sold this on Tuesday the 4th last week. So that this red bar here that kind of didn't really go anywhere. I sold the 66 strike for 1 cash secured put, and I got $1.35 for that. So pretty much bang on my 2% return I like to aim for, and we were around the 23 delta for that, I think, at the time. Since then we've come down, tested the 50-day moving average on Friday, and back up again yesterday, and struggling a wee bit today, but we're following the 20-day moving average still, which I like. So the 66 strike was effectively the lowest delta I could go, where I'd still get around my 2% and be below this 50-day moving average hopefully support level. Yep, so that's got out until the 5th of December to run, another 20 odd 4 days, a while anyway. So we'll just let that trade run at the moment. It's ticking along nicely. It does have the 50% take profit piece on if I can get that before halfway in the trade. Otherwise, we'll try and shoot for the 80-90% that we usually go for. PayPal, my good friend PayPal. I have no idea what is going on with PayPal now. Its fundamentals are strong. It's spending a bit, investing in new areas. Just cannot get back up to those 70 limits, those 70 levels and above. I thought I had it made on earnings day, right up. I had a cover call at the time up at 75. And nope, straight back down again. It is just loving the high 60s area. This 65 level is the new absolute support, and we are just bouncing around in this area. And I'm doing well off covered calls. So last week I had the 74 strike covered call. I had that for 31 cents. That expired worthless on Friday the 7th. And I've opened a new one for this Friday coming, the 14th, at the 70 strike. So up here, I just need to mark it on the chart. That was for a bit lower than I would have liked, 26 cents. It's whipsawing around a bit, so I don't really want to go below my cost basis selling covered calls if I can help it. Cost basis is currently 69.10. Assignment price, as you remember, was 74. I don't want to let this go until PayPal can get itself back above my assignment price, because that would be a lovely profit, which was why I was so excited on earnings day. Dividends coming up. Is it anything significant? 14 cents. No, nothing to worry about, as long as I'm not in the money on my covered calls, which I just don't see happening. Yeah, so the plan for PayPal will just be keep covered calling it until it can recover. Keep driving that cost basis lower and lower. Soxol, absolutely nothing happened with that. We had the semiconductor pullback. We did have a bar last Friday. I actually ended up touching my actual cost basis on this trade, but has recovered and it's actually working its way lower again. So we might be in a position soon where we can play around with these covered calls again. At the moment, there's just so much extrinsic value in them because I've sold them out to May next year that there's not much I can do with them at the moment. I mean, I'm absolutely happy. These covered calls are, as I've said in previous videos, at the levels of where I was assigned. We just need Soxol to play ball and be above those in May next year. So I don't intend on doing anything with that at the moment. We'll just let it ride, see what it does. We'll see if it turns around. UPSD, my high volatility play. So where are we with this? Yep, so I was assigned a ways back, and on UPST, let's have a look where we are. Yeah, so it was assigned at the end of October, as you remember, and I sold a covered call on the 7th for 24.86, which expired, is due to expire on the 14th. So we're still fine with that one. We are way below that. This one could be a falling knife for me. We may have to follow this all the way down. UPSD is a fintech company it's my high volatility play. It's my little bit of fun because the premiums are huge. I think it's And a pretty ridiculous price to earnings ratio here, 169. So that's why we're getting the huge volatility on this one. That beta of 2.99, crazy. But the premiums at very low deltas are still hitting my 2%. So I'm going for on the cover calls 0.5% per week. Obviously give me the 2% a month, and it is pretty easy to roll on either the call side or the put side for UPST, because the premiums are huge. So hopefully it'll turn around and head back up. I mean, where's the next support level for this guy? We've got one down here at 31. Don't really want to get that low. Something around the 38 level, not much. And then we're way back into a year ago before we see anything else decent. So a bit uncharted territory here. Is Friday's bar the bottom for this one? I would say not. We're still heading down. We'll just see what happens. We'll just keep selling those covered calls, generating the premium. NU. So I don't actually have anything other than my leap on this one at the moment. And usually my leap is down here at 8, as I've mentioned before. It is struggling to break this resistance 1630, 1650 level. Tested it again today, it's come back off. We have earnings after market close on Thursday, so that'll be interesting. What they're expecting, 3.52. What did we have last time? Reported 3.7. Okay. And 16 pence per share. 13.6 last time. If we get another good earnings, I think that will be the catalyst to get through this this all-time high resistance, and that would be fantastic for my leap. If we get up to 20, kind of the number I've got in my mind for taking some of the profit off the table on that one. If we get bad earnings and we drop, then I'm back into put territory for this one, as I've described before, to munch away at the leap premium I've paid. Ideally 14 I would like. This looks like an area of significant resistance before, which, as we know, can then become support on the way down. 14.50, 14 would be my ideal. Well, let's see what happens on Thursday. Gap, what are you still doing here? Closed you out a while ago for a profit. Let's get rid of the Gap. HIMS, yep, you were also closed out, and thank goodness I was out of HIMS before. See, this is a good reason why we try not to take cash secured puts through earnings. It's just too unpredictable. But HIMS is having a little retracement here, so we're going to leave HIMS alone for a while until we see where this ends up. It's having a few issues at the moment. We'll take that off the list. GME, yes. Previous meme stock I wouldn't have touched with a barge pole, but has since become profitable and stable, but didn't hold support as I expected around the 22 level that it had been bumping around for a while. So we've broken through that. I've got time yet to the 28th of November, which gives me time before earnings to decide what I want to do. I can roll it out and down for a profit at the moment, but I'd have to take it through earnings, which I would rather take assignment of the stock, and then you get the potential upside if you do get the pop in earnings. Let me check this one out. Poof. Had I had stock there, ridden that one up, that would have been nice. It is very earnings reactive. Look at that. Good earnings and a massive drop. Oh, yeah, it's just missing revenue. So yeah, at the moment, happy to hold it. Premiums are good on the call side. If I need to do, if I take assignment, so be it. Friday was a green day, and it's given that back the last 2 days, but not quickly. yeah, this is one I'm not going to do anything with at the moment. We've still got time, plenty of extrinsic value in the contract, so we'll see what happens over the next couple of weeks. Okay. PCG. PCG. What was I doing with you? Let's have a quick look. Yes. Okay. So that one closed yesterday. That's why it's come off the chart. It hit my profit target. So I'm just trying to remember. Yeah, on the 28th of October, we sold the 28th of November, expiration at 15.5. Up here, yeah, and yesterday it hit my 50% profit take, so that's why it's come off the chart. Yeah, a bit good quick trade that was for a nice 1% return in, what's that, 2 weeks, just under. I'll take that. I may look at getting back into this week, actually, depending on what the premiums are. I really like that 15.5 level. It's below all the moving averages. The moving averages were inverted the wrong way, but since our nice little rise and positive earnings, they're starting to rearrange themselves in the right way. And 15.5 is below them all. It's clearly a area of support that we've already tested, and it's held. Was previously resistance. So yeah, I've got some more powder to reinvest this week. I may jump back into PCG, but yeah, overall that was a nice trade. Yeah, pretty much $95, and yeah, I've given back about 40, closing that out, so that's fine by me. Happy with that. And HPE, my long-term covered call way below my cost basis out into the middle of next decade, next year. But HPE is coming down off its highs. If we keep coming down, I might be able to play around with these covered calls a bit earlier, see if I can get them higher. Just a reminder on this one, I exchanged my stock position where I was assigned at way back in time. We go back here. I was assigned at right back here. It's back at 2022 level. Yeah. It's been a long time. It's coming back down, which is not good for the leaps, but it is good for the covered calls. Nothing I can do with it right now. Just going to keep a beady eye on it, and we could easily bounce off this 100-day moving average. It was tested back in mid-October. Turned out to be good support. Looks like it's going to be tested again, potentially today, so we'll see what happens. When's the next earning? 2nd of December, not a million miles away. So yeah, I don't plan to do anything with that at the moment. So overall, portfolio is pretty healthy. Got some in the money, some out the money, but with the wheel, it's income I'm looking for, not capital gains. I have another account for my long-term buy and holds. This one is just to generate 2% on cash invested. Either that's the call side or the put side. I don't mind which. Yeah, so happy at the moment. Couple of bad actors I want to turn around. PayPal would be one of them. That would be nice. Novo, I'm hanging in there for you. I know I've sung your praises on these videos. Let's let's turn it round. And UPST, you're just a bit of fun. I'm just interested to see what happens with you. Your premiums are huge. We'll keep playing. All right, that's all I have for you. I'll stick another one up once I've made some new trades. And if not, I will attempt to hit next Sunday for the next, what will be week 45 recap. Okay, thanks all. Stay profitable, stay healthy. Catch you in the next one.